Hey everyone, it's Julie here with TipRanks, and today we're taking a look at the best rated stocks of the week, so let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at some of the best rated stocks from the past 7 days. These stocks have been picking up a lot of attention from Wall Street analysts, so we're going to take a look at what's been going on with them and what those analysts are predicting for the stock's future. We found these stocks over on the TipRanks Trending Stocks page. Found under the Tools menu, Trending Stocks will show you the best, most, and worst rated stocks over the last 72 hours, 7 days, or 30 days. So we narrowed in on the best rated from this past week to get our list down below. Just before we get into today's stocks, this is a reminder that tomorrow is the 4th of July, so the markets are closed. I hope you guys all have a safe and fun holiday. Be careful around those fireworks. To celebrate the holiday, we are having a summer sale with 40% off premium subscriptions and tools. So if you've been wanting to upgrade and unlock some great investment research tools, it's a great time to do so. Head on over to tipranks.com to take advantage of the sale. Now let's get right into our best rated stocks. Our first stock today is an interesting one as it is brand new to the public market. That is Waystar Holdings. Trading under the ticker WAY, the stock is currently priced at $21.83. It just hit the public markets back on June 9th, and since then is down slightly, about 2.7%. Waystar Holdings offers a cloud-based software solution for healthcare payments. Their platform offers financial clearance, patient financial care, claim and payment management, denial prevention and recovery, revenue capture, and analytics and reporting solutions. Serving mainly the healthcare industry, they empower organizations of all types and sizes with revenue cycle solutions to help achieve increased performance, operational efficiency, cost reduction, and strategic growth. They serve approximately 30,000 clients, representing over 1 million distinct providers, including 18 of 22 institutions on the U.S. News Best Hospitals list. As the company has just been public for a matter of weeks now, we don't have any earnings reports to look at quite yet, but we have gotten through the quiet period, and we now have had a handful of analysts weigh in on the stock, including one from Deutsche Bank. The analyst pointed out that Waystar's unique comprehensive technology platform significantly stands out in an industry that's traditionally been fragmented and dominated by manual processes and point solution vendors. Their ability to address multiple points across the revenue cycle presents Waystar as a singular vendor capable of creating stronger partnerships with large hospitals and healthcare systems. They did also emphasize the company's healthy financials, particularly its adjusted EBITDA margins that exceed 40%, which provide a strong valuation support when compared to its peers. Also initiating coverage on the stock was an analyst from Canaccord Genuity. They say that Waystar has established itself as a leading partner to healthcare organizations during an increasingly challenging and complex reimbursement environment, delivering modern cloud-based software solutions utilizing AI and machine learning technologies that drive improved financial stability. The company currently has less than 10% market share, with the potential to double its revenue by further penetrating its client base. 9 Wall Street analysts have recently all weighed in on this newly public company, and every single one of them gives it a buy. Analyst average price target comes in at $27.75, implying an upside potential of 27%. Looking at our list down below, on the low end is a couple buy ratings at $24 for an upside of 11.6%, and our high-end price target comes from Goldman Sachs at $32 for an upside potential of nearly 49%. Second on our list is a company that is definitely not new to the markets, and in the past few weeks has been hitting all-time highs. We're taking a look at Micron. Trading under the ticker MU, they're currently priced at $136 per share, and that is after astounding growth this past year of about 115%. In the last 3 months, the stock has climbed 6.8%. Micron is a semiconductor company that specializes in memory and storage solutions. And they are one of many companies gaining on the recent AI boom as companies rely on more powerful computer chips in their data centers that train and operate AI systems. For over 45 years, the company has been instrumental to the world's most significant technology advancements, delivering optimal memory and storage systems from a broad range of applications. Their chips are used in smartphones, tablets, PCs, data centers, and industrial equipment, to just name a few. Micron is trending on Wall Street following their third quarter earnings report back on June 26, where they had an earnings and revenue beat, seeing big year-over-year growth. For their third quarter, they reported earnings per share of 62 cents, coming in 14 cents ahead of analyst expectations and seeing a big year-over-year jump. Revenue for the quarter came in at $6.81 billion. They said that robust AI demand and strong execution enabled Micron to drive 17% sequential revenue growth, exceeding their guidance range. They're gaining share in high-margin products like HBM, and their data center SSD revenue hit a record high. They're excited about expanding their AI-driven opportunities and are well-positioned to deliver a substantial revenue record in fiscal 2025. We had a lot of analysts reiterating price targets following that earnings report, one of them being a 5-star analyst from Robert Baird. The analyst noted the company's significant planned capital expenditures are in direct response to the strong demand forecasted, particularly from the artificial intelligence sector. This is expected to significantly boost Micron's revenue and profitability, especially considering the high gross margin potential of over 60% that HBM products are projected to yield. Furthermore, the anticipated grants from the U.S. CHIPS Act position Micron favorably in the semiconductor industry. In the last 7 days, there has been 20 new analyst ratings on the Micron stock, all but one coming in as a buy. Overall, the stock has 27 ratings with 25 buys and 2 holds. The average price target comes in at $161, implying an upside potential of over 18%. Looking at our ratings down below, this Wells Fargo one is a typo. It's supposed to be 190, so ignore that one there. A lot of price targets in those low 20% range. High-end price targets coming in at 180 for upsides of 32%. If you've made it to our third stock today, this is your reminder to make sure you hit that thumbs up button and that you're subscribed to the channel as well. Third on our list of trending stocks is FedEx. They trade under the ticker FDX, currently priced at $293 per share. Over the past year, their stock has gained 20%, recently spiking up here. You'll see. We'll get into why in just a second. They've gained 7% in the last 3 months. FedEx is a well-known multinational delivery services company. They provide customers and businesses worldwide with a broad portfolio of transportation, e-commerce, and business services. Each of their independent operating companies has special strengths and capabilities, delivering to over 220 countries and territories around the world. Those businesses break down to their FedEx Express, FedEx Freight, FedEx Logistics, FedEx Office, and FedEx DataWorks. The stock jumped up following their Q4 and year-end financial results back on June 25th. They not only had an earnings and revenue beat, but also introduced their 2025 guidance. For their fourth quarter, they reported earnings per share of $5.41, beating expectations by 7 cents per share, and revenue came in at $22.1 billion, which also exceeded estimates. Earnings per share for the year was $17.21. Management said that they made significant progress in fiscal 2024, ending the year strong, delivering 4 consecutive quarters of expanding operating income and margin in a challenging revenue environment. They said the results were unprecedented in this current environment, and they expect the momentum to continue into fiscal 2025 as they advance their efforts to create the world's most flexible, efficient, and intelligent network. One 5-star analyst from Argus recently weighed in, reiterating their buy rating and increasing their price target. They noted that the company's Q4 results topped expectations and that the firm thinks the shares currently offer value, particularly as management makes progress with FedEx's transformative 5-year plan. 13 analysts weighed in on the FedEx stock within the past 7 days, and the stock has 17 ratings altogether, coming in as a strong buy with 13 buys and 4 holds. And the average price target comes in at $322, implying an upside potential just shy of 10%. Looking at our ratings down below, you can see a handful of analysts all increasing their price target on the stock. Our low end is a hold here that has a downside of 27%. Our high end price target coming in with an upside of 22% from JP Morgan. So that is a look at 3 of the best rated stocks that have been trending with analysts this past week. Let me know your thoughts on these companies and whether they were on your radar recently in the comments down below. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.